Hey, podcast world. It is Podcast Tuesday.
It is Tuesday.
It is Tuesday.
Or is it Wednesday? No, it's Tuesday.
It's Tuesday. It's Tuesday all day today.
All day.
24 hours
Yeah.
in a day. And this is an exciting week because it is the week before Christmas.
Yeah.
I am in Waco this week.
You must be tired. You actually flew in today.
I actually flew in, got here just in time to do the podcast that we're about to do on this show.
You're probably tired. Your arm's tired?
That is like the worst joke.
I've been thinking about it for about 5 minutes.
Ladies and gentlemen, Lee Boyd is not known for his ability in stand-up.
No, I'm not.
FYI, full disclosure.
I'm not a stand-up guy.
You are a stand-up guy.
Oh, well, thank
but
you.
You're not a guy that does stand-up.
No, it is a treat to have you here, though, to actually see you, smell you. You're here.
Smell me, huh?
Well,
okay. Well, I'm just going to move on from that one. I'm here because of the big 470 holiday party tomorrow.
Yeah.
Which I must say, in the past few years, has become quite an event here in Waco, Texas.
It's a big deal. The real question is, so we do a big potluck. Everybody brings something. Mm-hmm. And what did you bring?
Well, you'll just have to show up tomorrow and find out, won't you, Lee?
Oh, I guess so.
It's a secret.
It's a secret?
It's a secret.
You know what our producer Al's bringing?
What's that?
Water. He signed up for water.
Somebody has to bring the water. Someone has to carry the water.
Yeah.
Al's been carrying our water for months now.
Months and months and months. I'm looking forward to Al's water.
Speaking of water, I'm on a water fast today. What do you think about that?
That sounds dumb. That's not a thing, is it?
I know. It's dumb right now because I'm hungry.
I mean, I understand a food fast, but a water?
You can't have a food fast.
I've never read something that says
have a food fast.
Why can't you
break a fast with food?
Oh, you break a fast with food.
Means no food.
Oh, so it's okay, but
well, listen, ladies and gentlemen, we're not going to make you listen to Lee learning what a fast is. But we are going to tell you about Kate Terry, who is our guest today, who is the COO and co-founder of Surround Insurance.
Yeah, Surround is going to be launching a product this coming April. Really going to enjoy talking to her about what they're doing. It's a very niche product, and it fills a big need that you might not even know was there.
That when you hear about it, and we'll wait until the actual episode in a second to tell you what it is, but their market and who they're after is an enormous demographic that really has a particular problem that they have a solution to. And I have to say, I think it's really smart and really attractive. And I expect it to be successful, but they are a straight up insurtech that was founded by insurance people.
Yeah, and I think that they're on a great track to success, and I'm excited to hear from her today.
Yeah. So, without further ado, we'll go to the episode instead of me explain, or maybe first we'll pause and I'll tell you what fasting is. But
I mean, I know what fasting is, but
no,
a water fast just sounds stupid.
No, you can't have a food fast either. So, anyways, folks, without further ado, here's our episode with Kate Terry, COO of Surround Insurance. Hey, everybody. We're here with our guest today who's coming from us, I think probably someplace where it's snowing, just so that you know. Kate Terry, the COO of Surround Insurance. How are you doing, Kate?
I'm doing great. I'm happy to be here with you.
Great. Where is it that you are today anyways?
Yes, I am in chilly Boston, Massachusetts, where we've had yet another snowy day already, and it's only December.
Wow. Is that a lot for you guys? Is that unusual?
Yes, it is. We don't usually see snow until January and February, so I don't know. The kids are probably going to be in school until August at this rate.
So, but White Christmas?
What usually happens is it'll rain and turn into an ugly, muddy day on the 24th. That's kind of New England weather, right?
Right. So you're with us today from Surround Insurance.
Yes.
Give us a minute or two on what surround insurance is and what you do there?
Yeah, absolutely. So my co-founder Jay Grayson and I are building modern insurance for people who live in the modern economy. So what I mean by that is this. So property and casualty insurance used to be a coming of age product, right? You'd graduate from college, you'd buy a car, you'd get car insurance, and that actually meant that you weren't only covered driving your own car, but also when you borrowed your roommate's car, if you were riding a bike and got hit by a car, or you're a pedestrian, etc. But, the economy has changed, right? And people are delaying or opting out of buying the assets that insurance used to come with. Um, Sometimes altogether, right? They're living into their 40s in the urban cores and they don't have any of this coverage. And Jay and I are both former executives from a big Fortune 100 mutual, and we saw that these modern customers really don't have any product options. So what we're doing is we're building the products for them. Our starter pack of insurance is our first product. It launches on April 1st. It covers you if you don't own the assets but you drive. It covers your driving, covers your exposure when you're renting an apartment, and also covers some of your freelancing exposure if you have a side gig, like more than half of people in our target market do.
Yeah.
Does it cover you if you're riding along in an Uber?
It does if you're right, not if you're driving, right? We're not doing commercial insurance yet of that type. But yes, if you're riding in an Uber and the driver's insufficiently insured, it absolutely does. Covers you if you're on a blue bike in the city and you get hit or you hit somebody. All those exposures that are sort of the normal ways that people get around today, but didn't exist when insurance products were first dreamed up.
So we hear a lot about insurance for millennials and how millennials are going to affect the industry. But you guys have just you. This is no goofing around. This is insurance for that target market. Is that correct?
Yes, straight up insurance for that target market, but structured a little bit differently from how maybe some of the other insurtechs have hit the market. I think this comes from the fact that both of us have 15 years of insurance expertise. My background is actually in insurance product management. So yeah, we're you won't find two people who are more enthusiastic about insurance. But the way we're approaching this market is a little bit different from kind of word on the street. Word on the street is that you should go direct to consumer and you should make insurance episodic for this market, right? And we did hundreds and hundreds and hundreds of interviews with people in our target market, and we heard a few things that didn't really line up there. One of them was that this idea that millennials want to do everything digitally really isn't true. What is true is that they want to do as much as they can digitally, but when they have a question, especially about a complex product, they want somebody to call and they want someone to pick up the phone and have an answer and also have a little bit of warmth and concern for them as well, right?
It's an exaggeration to say.
Yeah, it's an exaggeration, right?
Mhm.
And you look and you say, well, insurance is actually an incredibly complex product, right? And who is well positioned to sell insurance to this market? And we thought about it. It turns out that it's independent insurance agents, right? Who still make up half of the property and casualty market. It's a $350 billion channel. And insurance agents have an issue too, which is that they used to sell these products at those moments when somebody, bought a car for the first time, right?
Yeah.
Yeah, and so what that means is that they often have the parents of young professionals as clients in their agency, but that intergenerational kind of transfer of the relationship wasn't really taking place because the products weren't there to support it. So where that leaves independent agents is, they would normally have sold to the young adult at 20, sometime between 22 and 26, right, when they bought their first vehicle, but now that vehicle purchase might be delayed until that person's 35, and then the independent agent has to try to win that customer back from the likes of Geico, which spent over $1 billion on advertising last year, Progressive and all the rest. So this starter pack that we've created is ideally positioned for that moment when the parent of adult children calls into their independent agent and says, hey, I need to take my kid off of our home auto insurance policy. I hear she's moved to the
Right.
city. And then the agent can say, well, that's great, congratulations. But when Junior borrows his roommate's car and drives to IKEA and gets in an accident on the way back and his doofus roommate didn't pay the car insurance bill, guess who they're coming after? your kid.
Right.
Right.
Yeah.
Yeah, in that
Right.
moment, right? And renters insurance really isn't enough. So we've tied a bunch of old school insurance products together in a new way to provide a single product to consumers that can be sold easily in that moment.
Well, you're a longtime industry
Yeah.
person. So one of the interesting things that Lee and I run into in our interviews is many people aren't insurance people,
Yes.
and I don't mean that in a negative way. They're just that's not what
Yep.
Yeah.
that's not where their background has been. It's been in technology most commonly. So tell us a little bit about your insurance background and how you kind of went from there to where you are today. Did you have a moment? Was there an epiphany? How do you get from being a big shot at Liberty, a senior vice president of commercial, I believe, to Surround?
Yeah. Um, I'd like to tell you a story about this very intentional path I took, but it actually was an accident. So we call Jay, my co-founder, the intentional entrepreneur, and I'm the accidental entrepreneur. But if I look back, the roots were there. So yeah, so I told you I have 15 years of product management experience, and in that last role at Liberty, I was there in the SVP capacity for 6 years. I had the commercial responsibility for the commercial auto business for the first part of that time, and then I had a group called Product Operations, which was several hundred people who did a lot of different things, right? But everything from preparing forms and sometimes typing things on forms in Wausau, Wisconsin, so commercial insurance forms that say had never been programmed in some cases.
Right.
PhD statisticians who we were trying to hire away from Google, who were building all of the predictive models for Liberty's commercial lines. So a very wide range of skills. And some days I'd sit there and I'd think, gosh, these PhDs are so brilliant, and they're using, the rudiments of machine learning, which was sort of new 3 or 4 years ago to insurance when we started looking at this. But the only things we're ever going to work on are improving the existing business we have by just a tiny bit incrementally, because nothing else makes sense in the context of a giant mutual, right?
Right. Right.
And I'm like, I think the folks in Wausau actually might be doing more for our customers on a day-to-day basis because they're actually responding to an actual customer need. And I'm not saying that the data and analytics aren't important, they're crucial. But I think you can also go down a path where you get blinded by what's cool and new in the industry and sort of miss what's new among the emerging consumer base, right? So I just felt like we had these very rigid products that had sort of um, that were just unchangeable and not
Sure.
responsive to new consumers.
Sure.
So I left on very good terms and did two things: went back to school for a bit, and also started a consulting firm um, doing basically product consulting for carriers and also for investors who are interested in investing in the insurtech space. So I was talking a lot about product innovation, how to change the product. And a former colleague called me up and said, "You must know this guy, Jay Grayson. He was a former peer of ours." And I didn't. Says something about how big the executive ranks are at large insurance companies, which may or may not be part of this problem, right? Uh,
Right. Yeah.
yeah, and I did a little bit of consulting for him. He had this great idea for Surround, which is kind of as I described it before, but he had a corporate finance and customer experience background. And about 2 months in, he said to me, "Have you ever thought of co-founding an insurtech?" And I said, "No." And he said, "Well, you asked me if you'd like to
You didn't need to
co-found
think
an
about that.
insurtech, I mean Surround." And I said, "No." And he said, "Why not?" And I said, "Well, I'm actually really concerned that the regulators aren't going to like our approach." And so he said, "Well, how would we get over that?" And I was like, "Well, we should go visit some regulators." And so that's what we
Right.
did. And we drove across the Midwest and visited a number of different regulators. And I said to my
Road
husband,
trip.
yeah,
Road trip.
yeah, road trip, road trip. So I said to my husband, look, because Jay and I also scarcely knew each other, which was my other concern, right? That whole like probably shouldn't start a business with somebody you met a few weeks ago. So
Yeah.
I said to my husband before I left, either I'm going to come back and I'm going to tell you that I want to co-found an insurtech company, or I'm going to be calling you from the side of the road in Peoria because Uber's not there yet. One of the two. I don't know.
Yeah.
But it actually turned out to be great. We actually got a lot of support from the regulators because they sort of said, we see this hole in the market too. And we get people who come in here from the tech side who sort of say, hey, I launched something in the market and I'd like you to waive the rules. And you guys have figured out a way to work within the existing infrastructure to present a completely new suite of products that we really see as needed for this population. Um,
So they
really
really
cool.
liked. So they were
Yeah.
excited by you. guys,
like actually excited. Yeah.
not like the co-founder.
Yeah, it was amazing. And it also turns out that a road trip through the cornfields of the Midwest is an excellent way to figure out whether you and your co-founder can get along. Turns out that you can drive and talk about insurance for 18 hours a day and then like wake up and do it again the next day.
Impossible. Not possible.
It is with great enthusiasm, no less.
Did you kind of look at this as a product challenge?
Yeah, and Jay might say something a little bit different because obviously our viewpoint comes from what our background is. But if you look at insurtechs that have really grown and gotten to the market a little bit earlier, like Jetty and Lemonade and maybe ClearCover, a lot of those are companies that are focused on more beautiful distribution. Some of them will argue they've got some product tweaks, and I would agree with that. But by and large, it's about taking an old product and a monoline product and selling it in a beautiful way. Which 5 years ago, if you were in the InsurTech 1.0 wave, that was exactly what needed to be done. And it's something that's accessible to tech people who know how to sell things beautifully online, right? But that moment has gone. There's plenty of competition in that space. And what hasn't really been innovated at all is the insurance product, right? And so there's all this blue sky, but it's really hard to do, right? You need a lot of know-how and you need a lot of lead time and a fair amount of investment. And that investment probably has to come from people who know insurance, right? And so, yeah, so we're kind of in this wide open field that we think of as InsurTech 2.0, but it really is a product-focused set of changes.
When you consider the size of the cohort that you're selling into, the demographic size, it's an enormous market, right? Tens of millions of potential customers. Right?
Yeah, absolutely. I mean, we think that the first configuration of our product, which it's the MVP, it's the Model T, appeals to a $10 billion slice of that market that's nobody is serving well today.
Well, so tell us exactly what it is, right? So
yeah,
is it a flat rate per month to cover you for all of these different incidences? Is that what it is?
Yes, it is. So it's priced more like a group product than like an individual product. So the sophistication that we see in auto rating, which I am incredibly familiar with given my background, it's a competitive dynamic, right? You've got a completely commoditized product, and the only way to compete other than really cool advertising or customer experience is really on price. So that's why the so sophisticated. But at least initially, we're stepping into kind of a void, right? Piecing together some pieces of driving coverage, some pieces of renters coverage, and some pieces of miscellaneous professional liability. And there is no straight up competition. So yes, we're entering with a flat price, which also makes it really easy to sell, both for the independent agents and for employee benefits brokers, which is another group that's interested.
One of the videos I was watching of you were talking about how you're able to change, I guess after time, you would be able to upgrade to for the policy to follow a person to a purchase of a new home, for example, without actually having to cancel their policy. You could just change it because your example is a lot of times 85% of the wording is the same.
Yeah, it's true. And now, you're going to get lots of calls from people saying it's not exactly the same, but depending on the carrier makes, we create shopping moments in this industry. Moving from renters to condo, really all you need to do is add the coverage for the inside of the unit, right? Moving from condo to homeowners, really all you're doing is adding the coverage for the home itself. And the thing is, the losses that are inherent to that condo or that home, that's all information you can get from third parties these days, right? You don't need to ask people 27 questions about, the type of flooring in their basement. A piece of this is making those easy. But the other piece of it is a realization that in a world with fewer assets, where the loss and the source of claims is inherent in people's behavior, right? And so one of the things that we're starting from the very beginning is to collect and use second party data with our customers' permission. So, information from the open APIs of sharing economy websites to provide better coverage, to underwrite more carefully, to provide enhanced products and extra pieces of products and coverage. And that's just a whole world of data that other industries are using, and it can be used both for our benefit and our customers' benefit. So we're really excited about that data play. We we think of it like human telematics.
What about IoT devices in this world? Do they have a place in this scenario yet?
Yeah, that's a really good question. I think yes, and we've got some ideas around it, but it's a little bit further out from for us, probably than some of the straight up sharing economy usage data, right? Which is already available apps and the API.
Well, that's what I was trying to think. I was trying to think, how would you, if you don't own a car, but yet you're going to do a ride sharing, I guess you could use apps on your phone perhaps, but it wouldn't be a plugged in device because you don't own it.
Right.
And then maybe a telematics or a IoT device within the home,
Yeah.
rental, something like that.
Yeah.
Very, very interesting.
Yeah, you don't even necessarily need some of that though to expand
Right.
the product world today, right? So a lot of these sharing economy services, Uber and Lyft and Airbnb, et cetera, they have open APIs. So as an insurer, with the consumer's permission, if they do an OAuth login, we can actually get their usage data. So we know what they're doing. Like, so with Blue Bikes, we might know when they undock a bike and where it is and where they're redocking it. And that can allow us to do kinds of things like modeling to help them avoid the most dangerous intersections over time, to help us understand if they ride a lot during the day at night, to help us understand exposure in terms of miles, right?
Yeah.
I mean, that is in telematics without needing the device. Not that there's not a place for IoT, there certainly is, but you don't even need it today necessarily.
No.
Like my son who lives in New York City, who doesn't own a car anymore.
Right.
Yeah.
And only pretty much only moves around with an Uber.
Yeah. Right.
So that would help you tailor his policy, I would assume.
Yeah, it would. I mean, you can even go and download your own Uber data. We were actually just looking at our own the other day, and it's, it's a little bit terrifying in the sense of you need to make sure that you protect your own and other people's privacy and the privacy of our consumers, certainly. But when you look at it just as sort of aggregate modeling data, and you look at where things are busy and where they aren't, and the start and stop points, it gives you a lot of information that can help us to tailor a safer world.
The exciting thing about you guys is that you're coming.
Yes.
But if I wanted advice around insurance today, the answer would be
not yet, but soon. Yes. So we're set up as a managing general agency, which means that we design the products, but we don't hold any of the balance sheet risk. We transfer that to a reinsurer. And we have just recently come to terms with one of the largest reinsurers in the world. Can't tell you who at this point, but A+ rated. We are super excited to work with them. So once you have reinsurance, it's for real, right? So we're finalizing our fronting arrangements, and then we'll file the appropriate regulatory filings and get to market probably around April 1st.
That's exciting. And so talk about distribution. I mean, you mentioned agents already, but talk about what your plan for distributing your product is.
Yeah, no, that's a good question. And we actually, the funny thing is that when we started out on this venture 2 years ago, we actually thought we would be direct to consumer, but the economics are just terrible. At least straight up direct to consumer advertising through Facebook and Google, et cetera. So independent agents are our first channel. And we have a number of large preferred agencies in Massachusetts who've signed pre-orders. Massachusetts is our alpha state where we're based here. That's why, and it's also exactly the kind of urban market we're looking at. And then we'll expand with sort of regional insurance agencies through probably the first 8 to 10 states. We hope to be in 10 states by the end of 12 months of operation. At that point, then we become much more interesting to some of the national brokers who we've been talking to. They'd like to put us up on platforms, but you need to have kind of a certain state footprint for that to make sense.
Sure.
So that's the IA channel. Then we're working with a couple of employee benefits brokers. We have to have a paid pilot with one of them, where there's been an increase in the sale of voluntary supplemental benefits, right? So not the health insurance that you would typically buy, but the other offerings. So it might be a cancer policy or an accident policy, possibly a travel policy, that sort of thing. Property and casualty has typically been a poor fit because those are group priced products. So, it's $12 for you and $18 if you add your partner, that sort of thing. Oh, and by the way, if you want homeowners insurance, go talk to those people at that table and they'll ask you 47 questions and get back to you 2 days later, maybe with a price, right? Like the sale just doesn't fit.
Right.
But because we're flat priced and because our underwriting is super simple, we only ask 3 questions and we pull the data we need on the back end. It fits really nicely in that channel. So We've got a paid pilot right now to do some product development. And also among our investors, we've got some folks out of that channel who are pretty excited about what we're doing.
I have a question for you about, just the finer point of how you guys realize that. Like you said, you were thinking D2C at first, right? And which makes sense and is very millennial and very insurtech-y and all that stuff. And then, but you ended up at agent, which you don't think about agents and millennials in the same sentence typically. So how did you get there?
Yeah, we got there in a couple of different ways. We got there because we were sort of talking to some agents almost by mistake early on. We ran into them at agency conferences and they kept saying, but why don't you come work with us? We have this problem that we don't know what to do when, the young adult ages off of their parents' policy for whatever reason, moves out of the home. We can't sell the auto insurance policy like we used to. We thought, okay, well, that's pull, but that's not really a sale, right? And then some of them said, but if you had a product for us, we would even pay you lead generation fees back when we did sell the auto product to them later because we've held them in the channel for us. We thought, okay, that's more interesting.
Yeah,
and then they said,
sure.
Yeah, and then a number of them said, and the fact that what you have is a fairly low average written premium product, which can typically be a problem in the IA channel in terms of it being less interesting, right? They said that doesn't even matter because it's much higher than renter's insurance. It kind of matches the credit on the auto insurance, the home, the parent's auto insurance policy when you take the adult child off. And it's enough with if you could design a simple, slick interface where we didn't have to do a lot of work, there's a lot of value there for us. So it's not even about the premium. And we said, that's interesting, but what about millennials? And then as we started interviewing a lot of millennials, we were hearing a lot about financial arrangements they had with their parents, right? And when we went and dug in on the details, it turns out that almost half of millennials between the ages of 20 and 40 have their parents paying at least one significant bill every month. So typically health insurance, gym membership, cell phones, rent, etc. So half, right? That's on a regular basis, and 75% of millennials reach out to their parents in a financial emergency. So there's this intergenerational financial arrangement that just wasn't there a generation ago. And so then we kind of put two and two together and we were like, wait a minute. So the parents of millennials tend to shop with insurance agents, right? We all know that. Insurance agents are saying they have no way to keep their clients' children in the channel. Millennials, when we talk to them, are actually very concerned about risk, but they don't know how to fix it. They don't know what to do, and they're willing to rely on their parents, especially the younger cohort of millennials and Gen Z behind them, when they're making financial decisions. It's like a perfect storm. So it was a little bit of, the pieces became evident as we talked to consumers of various different types, and putting them together. It just made all the sense in the world.
I would imagine that the agents that you guys are speaking to are probably super excited about this.
Yeah. We've got some real believers among the folks that we've been working with, and they've been really generous with their time in helping us understand, exactly what we could and couldn't do, and what kind of interface we needed, and how much work was reasonable to expect for an agent, what kinds of limits we needed. It's really been great working with them.
Let's talk for a few minutes about being an insurtech.
Yeah.
One question that we like to ask people is, do you consider yourself an insurance company or a tech company? And because you guys are insurance people,
Yep.
I'll ask you that question. What are you?
Yeah, we are definitely insurtech because they get to wear jeans to the office, right?
Okay, well,
that makes
number
sense.
one qualifier. Right?
And at straight up insurance conferences, for the first time in my life, I feel kind of cool showing up in jeans, right?
In G, yes.
But yeah, that's one of those questions that I can't really answer because we're both, right? I've been talking a lot about the insurance, but we've built this technology platform that's pretty amazing that allows us to not only distribute our own products, but also to pull in bits and pieces of other sorts of products that could be our own or could be somebody else's, to create a personalized insurance package for each person, right? That's where we're going. Completely personalized insurance for the 100 million people who buy more than minimum amounts of insurance in the US. That's just way too big a chunk to bite off and start with, right?
What might an example of that personalized insurance?
Yeah, so we've got some very large insurance company partners that we've been talking to about products like a really simple disability product, right? Or maybe catastrophic disability, which has never made sense to sell alone because it's so low premium. But when you're already underwriting somebody on all these other coverages, it makes sense to roll it into the package, right? Or pet health insurance or an annual travel policy, which is a little bit outside my realm of expertise. So I wouldn't want to build those products, but there are companies who we can partner with and resell them as part of our bundle, right? We know that millennials in particular are among the highest percentage of pet owners, and they travel more than prior generations do. So those are products that make all the sense in the world, but have traditionally been tough to sell through the IA channel because they are so low average written premium, right?
Right. Back to the InsurTech question.
Yeah.
There's a number of accelerators,
Yes.
incubators that you guys have on your website.
Yes.
Is that because you guys are graduates of those accelerators? You've been through them, or talk about them. Like we've had on Ali Savabi from Plug and Play, who is not there anymore.
No, he's not. But he wrote us one of our first big checks, so we're big fans.
Yeah. So tell us about your experience there. InsurTech, Hartford. I mean, some good names.
Yeah. No, we've actually been really lucky to be part of several different accelerators. So we were part of the Mass Challenge FinTech cohort and won one of the awards there this summer. We were part of the Plug and Play InsurTech batch I guess it was the winter batch. We're part of the Digital Credit Union FinTech Accelerator here in Boston, and we're actually now over at the Harvard Innovation Lab, Launch Lab X, which is their alumni accelerator. And here's what I would say. There are two things about it. That's a lot of accelerators on the one hand.
Mm-hmm.
On the other hand, it takes 2 years to get to market if you're an MGA. That's just the reality of it. And so there's a longer period of time than there might be where you're pre-product. Then there might be for the kind of startup where you can put an app in the app store in 30 days and test it, right?
Yeah.
So some of it is that these accelerators, because most of them have been focused on InsurTech or FinTech, they're where we found kind of our people, right? The people who understand what we're doing and who are willing to support it. And from them, we've walked away with some really great relationships, either investors or corporate partners who are willing to give us product or give us time or who want to do some paid pilots so that we can look at chunks of the market together. So that's really what we got from them. We've really valued those experiences, both in terms of what those accelerators provided, but also in terms of our peers, right? Like there aren't that many InsurTech startups and there aren't that many in Boston, which is where we're based. And so to have a chance to sort of just network and get to know these folks who are kind of fighting the same fight from a slightly different angle.
Whenever I was studying before this podcast, I read where you received your MBA from Harvard, which to me is such a big accomplishment. Whenever you received that, it looked like it was ending in 2005.
Yep.
Did you ever feel as though you were going to be an entrepreneur? Is that why you did it, or did you do it just for general business knowledge?
Yeah, I had been a management consultant before that, and I actually thought that I wanted to be in a corporate role. And I actually did my internship between the 2 years of business school with Progressive, which was my first exposure to insurance. And that Progressive is an amazing company. I went and worked for them for 3 years after graduation as well. And I thought I would stay in the corporate world, and climb the ladder and see what I could do to kind of move and change. But, again, if I look back, the second year of business school, you get to choose at HBS, you get to choose your classes. And half the classes I chose were about entrepreneurship.
Okay.
So maybe you're paying a little bit more attention, right?
Yeah. I saw that your undergrad was from Harvard.
Yes.
And what made you choose, was it Celtic Studies? Is that right?
And that's not Boston Celtic.
So what led you to that? And what is that?
That's a really good question. So I went to college thinking I was going to be a chemistry major, and I was like one course short of a chemistry major. And just about halfway through, I had this moment when I was in an organic chemistry lab and my experiment blew up, like literally blew up in front of me, glass everywhere. And the other people in the lab turned around and looked at me and went right back to their work. And I thought, these are not the people that I want to spend my life with. I'm married to a research scientist now, and he's wonderful. So again, the writing maybe was on the wall. I don't know. But yes, so I had always read a lot of Welsh history of all things. Somebody gave me a book when I was a child, and I was just very interested in the language and the literature and the history. And Harvard let you create your own degree. So there was a graduate department of Celtic languages and literatures, and they accepted me as an undergraduate as a special concentrator. Of course, my parents said, "Well, what are you going to do with Welsh?" Right.
Right. Yeah.
But I also had an internship. I worked 30 hours a week when I was in college for all 4 years at a small consulting firm in Cambridge. When I graduated, I went to a competitor consulting firm. So I'd like to pretend that it was the years of medieval Welsh that I studied that led me to where I am today.
Well, it's funny that you bring this up because my wife and I were just the other night watching an episode of The Crown.
Yeah.
Oh, yeah.
Did you hear about this?
Yeah.
I've not heard about this.
There's an episode where Prince Charles goes to Wales to study how to speak Welsh.
Okay.
Have you seen this?
I have not, but that's amazing.
It's maybe episode 4. I don't know, something like that. Anyways, you have to watch it because he learns. He becomes schooled in speaking Welsh and delivers a very famous speech, I guess.
Wow.
Wow.
When he became officially the Prince of Wales, he delivered his speech in Welsh.
Wow.
And it's a really big deal. So there you go. So you were just a trendsetter. That's all.
Yeah. Trendsetter.
We're following in his footsteps.
Yeah, I was about to say, I don't know about trend. It wasn't that long ago.
And I don't know that there's a lot of other people in line to learn Welsh, but we'll have that on our new podcast,
Yes.
which will be titled Speaking Welsh.
FNO Welch.
FNO Welsh. There you go. FNO Celtic.
You might want to stick with the insurance for the day job, but I'll happily come back and talk to you about that one too.
Yeah, you might be our guest on every single episode.
Yeah, I don't know anyone else.
Okay, let's get back to InsurTech for a minute.
Yes.
There's a couple more questions I wanted to ask you. I wanted to ask you about being a female founder.
Yes.
And we've had a few female founders on. And the reason we've had a few female founders on is because there's not a bazillion female founders.
Yeah.
And so you're kind of in a small and elite group. Talk about that and why that matters.
Yeah. So this is kind of a difficult topic, right? Because there are actually plenty of women starting businesses in the US, right? I mean, women start businesses at greater rates than men do, I believe, but would also get a very small percentage of venture capital funding, right? And typically you need the venture capital funding or something like it to reach the scale to reach scale, let's just say. I think the latest numbers said that 2% of venture capital last year went to businesses with all female founding teams, and 16% went to mixed gender teams. That does not represent the incoming, the people starting businesses, right? It's a skewed game played with a rigged set of dice, basically. So on the one hand, I hope that I can set an example for my daughter, right? I have a 6-year-old daughter, and I made a career change midlife to do something new and risky, and I hope that she sees in that she can do that too.
That's awesome. I love that.
Yeah. And this insurance is an industry. Let's talk now specifically about InsurTech. There are very few InsurTech female founders. I think we all know each other. It's a great group of women. But insurance is an industry where 60% of the employees are female.
Interesting.
Yeah.
Is it really?
60%?
Yeah. No, that's not reflective of senior management, right?
No, not in the executive ranks.
Right.
No, it's not, right? And if you look at consumers who buys personal lines insurance, it also skews female, right? Because women make a lot of the purchasing decisions for families. And so the fact that women are so underrepresented among both the senior executive ranks where I was before, and also among InsurTech founders is sort of heartbreaking, right? But on the other hand, you kind of somebody has to do it for it to seem normal and seem like something that you can do. And so I hope I can kind of be that person a little bit and a little bit of a nudge to folks who are maybe on the bubble. But it's also hard, right? Like, let's be frank, we've walked into a whole bunch of venture capital funds, one after another, where everybody in the room is male.
Yes.
Everybody on the floor is male.
Right.
It doesn't happen incredibly frequently, but some percentages of the time people talk to me like I'm stupid, right? And it is a gendered thing. And it's wrong, right? It's as wrong as racism or anything else. But I don't really have the solutions for that except to build the very best company I can with Jay, and to be as successful as we possibly can, to try to find female investors so that if we make a lot of money, we're enriching them as well. And then we can all turn around and fund the next generation of female entrepreneurs. That's the only solution I see.
Good. I like that a lot. I did the same thing in the middle of my career. I changed from one industry to another,
Yeah.
and on an entrepreneurial level.
Yeah.
And I think it was a great benefit to my children, actually.
Yeah.
I mean, I don't usually think about it in those terms, but I think it showed them a lot of positive attributes.
Yeah.
And that their father's crazy too. I mean,
Yeah, that's true.
of which they would call in right now and agree to. But so I have one last question that I want to ask you, and that is, you guys have done all the groundwork.
Yep.
Congratulations on your reinsurance commitment.
Thanks.
You're eligible in several states, I assume. You're rip raring to go. You're just a few months away.
Mm-hmm. Yep.
At this point in time, what makes you nervous?
Everything. I thought that was what being an entrepreneur was about. No.
I didn't ask what keeps you from sleeping.
Oh, that's a good question. I see. No, I mean, it's a few things, right? I don't worry about product or pricing. I don't worry about our ability to do the legal steps we need to do or any of that, because all of that is stuff that you can tweak and change on the fly, right? I worry about a couple of things. I worry about our ability to sell this product really, really well, right? That we've really, really understood the market and that we've really understood our distribution partners and listened to them and put something into their hands that they can both sell and buy respectively. And you don't really know that, unfortunately, until you actually get to market, right? This isn't an industry where you can make 10 prototypes and sell them on a cart at the mall, right?
Right.
So I think that's one piece. And then I also just worry generally about the economic headwinds, right? We've been talking about recession for I don't know how long, 18 months at this point.
Mm-hmm.
We've got about $1.5 million in capital on board, which will get us to and beyond launch, right? But it could be that we're hitting the moment where we most need to scale right when capital dries up, and that kind of terrifies me as well. And there's little we can do about that, right?
Right.
Taking on too much capital too early is not a good idea either, for a variety of reasons. So I'm going to cross my fingers and hope that the economy holds out for a bit. Although, great businesses are built in tough times as long as you can keep the lights on.
Yeah, that is absolutely true. We love your honesty on that one.
Yeah.
I mean, that is wonderful stuff right there.
Yeah, good.
The good news is 2020 is going to be a good year. You heard it here first.
Yeah. On the FNO InsurTech podcast.
That's right.
2020 is a good year.
Recognized leaders in economic prediction.
I love that.
And Celtic studies.
Of course.
Yeah. Of course. Well, Kay, we very much appreciate you being on today, teaching us all about your up and coming launch and telling us about your past and all the exciting things that we have to look forward to.
Thanks for inviting me.
If somebody wants to find you or follow up on this, how do they do that?
Yep. They can email me, kate@surroundins.com, or our website, which is www.surroundins.com. Happy to hear from people, also on LinkedIn and easy to find there. So yeah, reach out if I can be of help.
Well, hopefully our paths will cross at a conference. I'm sure. I mean, we were at InsurTech. We just missed you among the 7,000 people that were there.
It was a crazy experience. Yes.
It's a crazy experience, but if not before, then next year in Las Vegas.
It's amazing the number of people in this industry who say things like that. But yes, absolutely.
Well, we appreciate you. Thank you so much.
Thanks to both of you. Take care.
Lee, I have 2 words for you.
Do tell me.
Celtic studies.
Celtic studies. I didn't know. I had heard her talk about that on a video I watched and was really interested in how in the world she went from that to this.
Well, whatever it is, we were talking just before we record this part of the program, and I'm saying how really impressive and well spoken
Kate
is, and I love the idea.
Yeah, I never thought about it.
I think it's an idea whose time has come. I mean, essentially, it's a transition between when your parents say,
yeah,
I'm not going to pay for this anymore.
Yeah, move on.
And when you become a full-fledged, settled down person, and that's an enormous group of people.
Well, I thought when she was talking about the impact on the insurance agents, the independent agents, how they need a product. And she goes, oh, wait, you have a need.
Right.
I can solve that problem, right?
That's
I can
right.
fill that need.
Right.
And then they said, it's so important that, eventually we're going to write these people's car insurance and their home insurance. We just need to hang on to them a little longer.
Right.
That's a big deal. That's a futuristic product that she's going to market with.
Right. And that's it. And that gets back to one of the themes that we've, talked about time and time again, and that's the solution of problems.
Mm-hmm.
This solves a problem. You have all these young adults who are aging out of their parents' economic umbrella, and they need a place to land. And you have all these agents out there who know these people.
Right.
They're the children of their customers. And so I have to believe that this is a successful formula. I'm very excited for it.
I think that they're building a great feedback loop so that they're able to get feedback not only from the insurance, the insurers, but also the independent agents. They're going to be able to get quick changes made to their product that changes and goes along with it. I think they're doing it all right. I mean, she is a well-educated person.
And the technology of using APIs to pull data from their usage of various and sundry products or services.
Right. Yeah. Second party, third party applications.
Brilliant, right?
Brilliant.
They discover that Joe Smith is somebody who rides a bike.
Yeah.
Every single day he rents a bike.
Yeah.
And he needs a customized policy that addresses, his risk.
And we talked briefly about it, but I would imagine their roadmap has, where do they drop that bike off? Where do they go to work each day? What road do they drive down? They're not necessarily going to use IoT at this time, but with that open source data, they're going to be able to ultimately figure out what does this life look like.
Sure.
A big area for them where they're going to be able to continually grow this market. It's not tapped out. They're not coming to a tapped out market. They're coming really with guns flaring.
Yeah. A terrific episode, and we're so grateful to Kate Terry for giving us the time and all the information, very honest and open.
Yeah.
Loved her candor that she brought to the episode today. And
what about all of her experience in actual insurance, right? She's not just a technology person who says, I think there's a need in insurance. She said, I'm an insurance person who there's a need. Let me use my specialty.
Yeah. And let me just say this for those InsurTech people who listen to our podcast, who maybe are technologists and not insurance people. Kate Terry was a senior executive at Liberty Mutual. She was a she was a big person working in the large insurance corporate world.
Right.
And probably could have stayed there and done very, very well for the balance of her career.
Absolutely.
So she not a lot of people know as much about product as she does. Very impressive.
Yeah, I think that's somebody, if you are starting a company and you are going into the InsurTech market, you need somebody like that on your team, somebody who can bring the expertise from the actual world of insurance. Right. You can't get that just from a consultant. You have to have that on your team.
Well, listen, we thank you for being with us today, Kate Terry, and look forward to hearing so much more about Surround as time goes on. And as always, we thank you for joining us, and we appreciate your participation by listening. And you can email us off of our website, fnoinsurtech.com. Send us any thoughts or opinions, good or bad. We'd love to hear them. And that's it for today. And we'll sign off by saying,
goodbye, everybody.